Derivatives trading involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results.
So stressful when the world's on fire. Good God. I can't look at this, guys. Like, my strategy is you buy it and you hope that you got a good spot. Yeah, but we all think you're crazy. You don't fight this. No way. The markets are freaking out and you don't think that anything is wrong? Come back tomorrow and I'll lose it all. Should be fun.
Good morning, everybody. Oh dear. Hold on. My sound is messed up. Let's see here. I've had this happen before. What did we do? This might mess up my sound though. Why am I getting that? Yeah, I'll just change the buffer size. You still hear me? Okay, we're good. That's weird. That's probably should restart my machine because of that, but it's okay. Hey, it is Thursday. We do have some numbers coming up here in about 4 minutes. Now 3 minutes. So let's get over to the charts real quick. So yesterday, huge drop. That was really quite a drop yesterday as the Bank of Canada. I'm sorry. Sometimes I get the dictators mixed up. You know, Justin Trudeau. Gee. Anyways, I just we're pretty quiet in the overnight session though. Okay. ES down a little bit. Oil still having wild intraday reversals and everything. They moved higher yesterday in oil. Gold and silver losing some of those gains from earlier in the week. So silver's doing okay, actually rising here. That's interesting. That divergence between silver and gold. Kaba down a little bit from its gains yesterday. That's not, I mean, it's probably okay, but really, one of the big things that I continue to see that really keeps this economy down is, China growth just really bad because they've made a lot of poor decisions over there. Then we got Bitcoin. It's come back a little bit from that big jump. I'm still concerned about further pushes down. And then we got the dollar. So the dollar moved up big time after that Bank of Canada decision. But now, giving that up this morning. So that's kind of interesting. Bank of Canada. I'm sorry. It's just Trudeau. They all, the names just all run together sometimes, Can't wait to refinance my mortgage. I tell you what, if we are moving into a recession in the second half of the year, as so many have predicted, although I'm, when I look at the numbers and the economics and what I know, it seems to me like that's the most likely case. But it also seems to me that our methods and our data right now are not very good in this situation. I've never seen so much economic uncertainty. Oh, did we? Let's see here. What's going on? Why did it turn off on me? Oh, battery. Hold on. Okay. You just won't see my face for a little bit while the battery charges a bit. Okay, so here is the news. We've got U.S. initial jobless claims. It's not giving me the number yet on my screen. Okay, 261 versus 235. Okay, that doesn't make sense at all. Oh no. That's okay. I don't know. I'm like recalibrating still here. Okay, 261 versus 235. That's bad. Could jump up there. Okay. That seems like quite a jump. Hold on a second. So let's come over here to Forex Factory. I'm gonna leave it alone for a bit because I do not like the way that looks over there in the micro yields. Yeah, 261. So like on May 11th, we had a similar number, but a jump up that much is a big change in that data series. The micro yields are all gummed up here. Let's see if we can help them out a little bit, or if they respond to me if I do anything weird. That maybe is a little dangerous. Now it's doing it over here. Hold on a second. There we go. The sound sounds okay on your guys' end, right? I think that voice meter bananas was just being a little weird because I restarted the audio engine and now it sounds okay to me. Dude, gold is surging crazy cray. See that in the upper left? So anyways, as I was saying, if we're going to have a recession in the second half of the year, then buying a house right now and then refinancing it in a year is like an awesome move. Whoever is lucky enough to pull that one off, if it works out, that's like, wow. Good morning, Uzi. Okay, so it is coming back a little bit. Micro yields are still a little sketchy. And change my screen to just be a basic one here, so you'll be able to see my market depth tapes and stuff. And now the Swiss National Bank. All three major central banks are signaling more hikes being needed because of sticky inflation and second round effects. Fed up next week. They are not immune to global inflation trends. Our traders are braced for hawkish surprises. Yeah, so this comes back to, like, if the Federal Reserve was to raise rates in June, there would probably say something, right? Like, there would probably be a leak from, like, we should be watching Nick Timoros's Twitter account super closely. Do you need a... Basically, yes. I suppose there are ways to get data without going through a broker, but it doesn't really... It's like... The only one I can think of is like so expensive that you might as well just go get the broker. Is the Fed dovish? Yeah, the dollar is moving down. Well, so the thing is that the Fed has been signaling for several months that they wanted to get rates to 5.25, and then wait and see how the market behaves. So when you're thinking about central bank policy, so I used to snowboard a lot. It's a thing here in Utah. And so when I was a kid, we would rent a board because it was only like $100 to rent a whole ski package for like the whole season back then. Probably a little bit more expensive than that now, but like if you rent it for the whole season, it's actually quite cheap. So I would go snowboarding every weekend, and the ski resort we would go to is called Snow Basin. So Snow Basin is, if you ever come to Utah to go skiing, guys, Snow Basin is kind of interesting because Snow Basin is up a different canyon. Like most of the ski resorts everybody hears about in Utah, they're up big and little Cottonwood canyons, which are just up from Salt Lake. But Snow Basin is like you have to go up to Ogden and then you go through the canyons. Okay. But these guys in Snow Basin, they spent a lot of money on their lodging and stuff. So you go to Snow Basin, it's kind of like the lesser known place, super, super nice, good place to go skiing. Okay. Well, Snow Basin, kind of interesting thing about Snow Basin is they kind of did an expansion. It's called Stansbury Mountain. So like you'll go up the regular ski lift and then you kind of transverse across and you can get to Stansbury. I think that they've since made a gondola that goes all along the bottom straight over there because it was kind of hard to get over there. But the problem with the Stansbury Peak is that there is always fog up there. So like if you were a regular like me and you gone up there and you've been down at like I could get down, you can ski it by memory. So you're like snowboarding down this mountain, you can literally only see like 4 feet in front of you. The fog is so thick when those clouds come through, right? Now when you get below the cloud, then it's like free skiing, and since like hardly anybody wants to go over there when it's like that, it's just like powder. Nobody's been on those trails. They're like really great trails. There's like lots of stuff to explore. It's great if you can get through the fog. So you have to think about central bank policy is kind of a similar sort of a thing. They are skiing through dense fog. And the reason is because the economy is an extremely complicated system. So they can really only see like what the economic conditions are now, and they have experience based on what they have done in the past, how the market tends to react to that. But their ability to see how the economy is going to evolve when you have a complex system of players that are all reacting to what you're doing is incredibly difficult to do, right? And so the Federal Reserve has been saying, well, we raised interest rates very quickly, and we've never done that before. And we know that the effects of monetary policy are a little bit lagged. So we kind of want to take a little break here, sit here, see what's going on first before we make a decision on which trail we want to go down. Because it's so foggy, right? That's kind of the thing that's been going on. And so they've been signaling for months that they would pause in June, and that maybe they wouldn't have to do anything again until the end of the summer is kind of the way that they were speaking. But now all of a sudden, as we're getting close to that meeting where they're supposed to pause, every other central bank is going, oh man, like inflation is still a problem. We really have to raise rates, and in surprising ways too, like catching the market off guards, doing it without warning. So, and this is interesting because we have started to go and try and model this out. So the big thing in economics right now, and I really think that as these models, so there's a paper out by Jean-Philippe. Go read this paper. I forget the name of the paper, but oh wait, I think I have it open over here. Oh come on, I gotta go find it. I'm gonna find it because I think it's an important study. This one. Oh, it's not that one. Oh, I'd have to go on LinkedIn and find it. I'm gonna find it. I know I saw it just the other freaking day. Here it is. Okay. So the study I want you guys to go and look up, and I'm gonna link it here. This on archive. Okay. Is post-COVID inflation and the monetary policy dilemma an agent-based scenario analysis? So the big thing in quantitative finance right now is agent-based economic models, where you create rules and you create these agents and you simulate, thousands of these agents interacting with each other and acting based on the rules that you've given them to see how things turn out in a really complicated system like this. Okay. And if I can go in here, our main results are fourfold. Without appropriate policy, the shocked economy can take years to recover or even tip over into a deep recession. The response to policy is non-monotonic, leading to a narrow window of optimal policy responses due to the trade-off between inflation and unemployment. The success of monetary policy in curbing inflation is primarily due to expectation anchoring rather than to direct impact of interest rate hikes. And for the two most sensitive model parameters are those describing wage and price indexation. Okay. So what it is saying, you have to get it just right. If you do too much, it's really bad. If you do too little, it's really bad. And what is the thing that actually causes the market to do things? Is it the actual change of interest rates, which is something I've argued in the past, by the way? Well, the change in interest rate does have impact, but the success of monetary policy to curbing inflation is primarily due to expectation anchoring. Right? So when you have central banks all around the world doing surprise interest rate hikes, that's really kind of important, right? Because that kind of suggests that they are losing control of the narrative, that they are not being successful in anchoring expectations, and ergo you're likely to see more inflation, right? That's why that's so important. But it's also important because these agent-based networks are likely to vastly expand our understanding of economics. So many of the difficulties that we have had with economics, a lot of people that say economics isn't a real science, they're full of shit. Okay, it is a real science, but it is still very much in its infancy, and our ability to actually predict things and gain solid value from economics is still very limited. And I think that part of that is because our models are not sophisticated enough, and these agent-based models are going to improve our understanding of things significantly, so that we can actually zero in on a central bank policy that's actually works. In the meantime, though, I'm a little concerned. And I'm going to be, just so you guys know, I'm going to be gone next week. I don't even think I'm going to be here tomorrow. It's possible that I might be here tomorrow, but I think we're going to leave today. It's kind of like when you have flight benefits, you only get to be on the plane when like the plane isn't full and take empty seats. And so you have to be a little bit flexible on when you leave and stuff. So I might not actually end up leaving today. I might be here tomorrow, but not for sure. But I'll still be around because, you know, I'll be 100% active. It won't be like, oh, we're just going to Tulsa. We're just visiting grandma. So last time around, somebody tried to cause a little bit of chaos while I was gone, thinking that I'd be gone and that they would, you know, have the ability to run amok. But, you know, there was the only difference is going to be I won't be streaming in the morning. So, but yeah, grandma has a house out in the middle of nowhere in Tulsa. And I think we're going to be there the whole week. So I am going to miss this. It kind of sucks. I don't think that anything super huge is going to happen on the Federal Reserve Day, but we'll see. And maybe I'll find a way to actually stream it. But yeah, it's going to be an interesting Federal Reserve meeting. I don't think they're going to surprise us. I really think that if the Federal Reserve changes its mind and says, well, because everybody else is raising interest rates, we probably need to do so as well. Otherwise, the dollar will just get crushed. You know, that they will say something before the meeting. So if you don't have TweetDeck with Nick Timrose on some sort of a list so that when he tweets it immediately shows up in your feed, I would add that, because if that's what happens, that's how it's likely to play out. Now, the other side of this is that we've been seeing this divergence in the data, right? A lot of the economic data, especially manufacturing activity, which has been terrible for a while, but even some of this the services sector data kind of suggests that the market is cooling off, and that we actually are getting that disinflationary kind of forces coming into the market and into the labor market in particular. So to see jobless claims spike up, that is a something that we've been watching for, right? That's like a good sign that maybe the labor market actually is turning over. And since, remember, jobs is a lagging indicator, we always get that one. I think that's one of the ones that new people get wrong all the time, because so much attention is given to non-farms, right? Non-farms is usually the biggest data piece of the month, right? But it's not leading. It's lagging. So labor is the last place that we should see it. And while we are seeing jobless claims coming in here, I wouldn't be surprised if we didn't see it really come through into the non-farms number until the end of the summer, you know? Treasuries today, buy sell range. Well, I'm not sure yet. So we saw a strong buy in the treasuries, but the net cumulative delta in the 10-year in ZN is down. See here? See that right there? Highlighting it for you on the screen. So even though we moved higher in price, we're down a little bit. Now, that's not true in the 30-year. That's not true in the 5-year, but the 10-year is down. Just remember, though, that the order flow in the 10-year is the most influential, and they kind of take cues from what's going on with the flows over here. Also note that the spread steepened considerably, right? So that is kind of like a tell that. So when you see the way that it works, oh man, now I want to talk about something really complicated. Okay. But sometimes when I'm doing this, it's kind of me, like when I talk through something, it kind of helps me to understand it better or to get it into my mind so that I can start thinking about it in addition to informing you guys, right? So what typically happens with the spread is that as the economy improves, the yield curve flattens out. A really, really super flat yield curve, an inverted yield curve, is a strong signal that a recession is coming on. But when the recession actually is imminent, when it actually starts to happen, what you see is the yield curve steepens back out. Right. So if you were to chart the yield curve, it'll go, down, 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 and then whoop, really quickly spikes back up, and then down, 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 right? And we are right here, right? So seeing the yield curve steepen here this morning is kind of an indication that the market sees this data as, oh, hey, maybe actually we are moving into a recession. That's my reading of it. Pat Robertson died. Not that I've ever really known or cared too much about the guy, but I do recognize who he is, and it's interesting that he died. Well, the flows are coming back quite a bit. Gold as well. The S&P 500 not reacting to that news as strongly as the rates markets are. We continue to get this thing where the rates market is so much more sensitive to what's going on than equities. But yeah, where we go from here, I'm not entirely sure. So let me come back here. Okay, we do have wholesale inventories at 10 o'clock. Oh, and we have Fed flow of funds report at noon Eastern time. We might be in a no recession. Yeah. Well, one of the things that gets really in the weeds with the whole recession thing is there's kind of like, okay, how do we define we're in a recession? And then there's like, why do we actually care when there is a recession, right? Because like to the average person, if we have negative GDP growth for 2 quarters in a row, but that regular person doesn't see any effects, he doesn't get laid off, he's not making less business, his particular business is just as good as it was before, then why does he care? He doesn't care, right? And so that's kind of the thing, is like when you have data that like it looks like the economic data has contracted, that we have had negative GDP growth two quarters in a row, but you haven't actually had like the unemployment effects, right? Then is it really actually a recession? I mean, by a certain definition it is, but it's not based on what the actual purpose of tracking a recession is for, right? No recession. Recession is a good way of expressing that. For sure. I think we probably should be okay to turn the camera back on now. Yeah. Okay, well, I'm not sure if the book has entirely recovered. If there was going to be like large meta orders coming in and starting to execute, could happen in the next 15 minutes. But this is also a time period where equity traders come in and start to pick up the pieces and start doing their moves. So we might see some movement based off of that. Although when that's been happening, it's kind of been a little bit more smaller moves in the treasuries. So I think that I should try and be vigilant and watch what's going on. I don't know if I'm actually going to end up taking a trade off of it. I'm also a little bit prone towards not taking a trade, or at least not taking a big trade, since I'm going to be gone for a week. And the last thing you want to do is come in and take a big loss and then be sour your whole vacation, right? Maybe that's just my past trauma speaking, but wasn't around yesterday, but what was that big sell-off about? Oh, okay. Well, so yesterday we had the Bank of Canada. Bank of Canada. We were joking in the opener, but that China, Canada, it all kind of rolls together. I get my dictators mixed up. Trudeau, Xi, they're all, they're similar names. They all flow together. I just can't remember which is which. Canada yesterday, surprise interest rate hike. So the market was not expecting them to raise interest rates, and they did. Okay, and before that, we also saw, I believe it was the Australian National Bank also did that. And now in the overnight, we also had the Swiss National Bank do that. So there's been a quick turn of hawkishness in the central bank policy. We're unsure if this spills over into the Federal Reserve. Market still thinks that the Federal Reserve will not raise interest rates next week, but the market thinks that, like, if they do pause, it's only going to be for a month, and that, like, it's an 80% chance that they do hike right now in July. So that was kind of the move. When you think about like what the reasons were and everything, it actually kind of seems to me like a muted move. I tell you what, I was really frustrated by that yesterday. So when that happened, I wasn't expecting the Bank of Canada to do it, so I wasn't ready for it. It was definitely too crazy to take the initial trade. When it started coming through, I did catch a good spot to kind of take it as she goes, and I was able to go long from 3.75 to 3.76. And then at 3.76, I got out. And that was the correct decision, because they did come back, I think, almost all the way to 3.75 before my session was over. But it was so very frustrating, because as soon as we shut the stream down, they spiked up to 3.78. So like, could have been like a $30-40 trade, but the timing of it and everything just didn't line up. And it's another one of those things where sometimes it feels like the market waits for me to shut the stream down before they execute, which can be really frustrating, but happens a lot. So it was a pretty big move. It was like almost 10 basis points, I think. And when you consider that we had other relatively large aggressive moves earlier last week, now we haven't completely retraced from the end of May, so there could still be more downside, but for now, this morning, well, they stopped at right where the single prints start, didn't they? Yeah. Well, yesterday, there was a kind of an interesting thing with like time frames and stuff like that, because it is absolutely the case that like you get a situation where the market is trending up on all time frames and you're like breaking out into new ranges, like when you break a new weekly high, weekly low, or monthly high and low, and that sort of a thing, like you can definitely detect a change in the markets, right? It's just like doesn't predict things, you know? Like if you get down to the weekly low, it is the orders that there does tend to be more liquidity there, but there also tends to be more market orders there to overcome that liquidity. So it doesn't actually predict whether they will bust through it or reverse, you know? But yeah, so we have definitely gotten to that spot, and there was all sorts of interesting market action and chaos yesterday off of it. Another thing I'll add is that often it is the case when we are selling that the markets in the Treasury market, when the Treasury market is selling, it is not uncommon for it to just slip through. Like they'll come down to the low, it seems like they're not interested in it, and then a correlated asset will fall and will break to new lows with hardly any volume having been traded. That was not the way that it happened yesterday. Every time that we broke new lows, it was quite aggressive. I mean, I could probably still stream, but I really don't like trading or streaming away from home, right? And it presents an opportunity for me to do a bunch of study, right? That's like 14 hours that I can use. Yeah, that Canadian surprise hike really spooked the notes yesterday. You know, I'm not even sure if I would say that it spooked them so much as like a lot of flow came out off of it, right? Because the thing that I thought was really surprising about that one was like off of the initial move, like really crazy strong move in the treasuries, right? But then a pretty strong pullback, and it really did go quiet and didn't really move a whole lot. And then later in the day, it started to move. So I think that means that a lot of more longer term passive kind of players were forced to adjust because of it. Yeah, so I'm not going to stream next week. We're going on a trip, but nothing else will change. I'll still be around, moderating Discord, etc. In fact, I'll probably be more vigilant on Discord than I usually am. Oh yeah, we haven't even talked about the GameStop thing. Why am I, and I haven't seen too many headlines about it either. Okay. But we should talk about this story. Oh, no. So this is maybe not what I understood. GameStop shares fall more than 20% after big executive shakeup. GameStop fired its CEO Matthew Furlong and appointed its board chairman Ryan Cohen as executive chairman effective immediately, the company said Wednesday. Shares of GameStop dropped more than 20% in pre-market trading Thursday. The company announced the shakeup just as it reported its revenue dropped and its loss narrowed in its first fiscal quarter compared to the year-ago period. GameStop didn't provide a reason for the firing, but noted the change in its quarterly securities filing. We believe the combination of these efforts to stabilize and optimize our core businesses and achieve sustained profitability while also focusing on capital allocation under Mr. Cohen's leadership will further unlock a long-term value creation for our shareholders. Cohen took a stake in GameStop in 2020, and in January 2021, he and two other former Chewy executives were named to the retailer's board as part of an agreement with the company's management. His investment firm, RC Ventures, currently has an 11.9% stake in GameStop, according to its filings. In a separate securities filing, GameStop disclosed Furlong was fired on Monday and said he will be permitted to receive payments and benefits associated with termination without cause. Furlong also resigned from the company's board on the same day, which reduced it to just 5 members. The filing noted Cohen will be in charge of capital allocation, evaluating potential investments and acquisitions, and overseeing the managers of GameStop holdings. In a cryptic tweet posted about half an hour after Furlong's firing was announced, Cohen wrote, "Not for long." The activist, inventor, and Chewy founder is known for saying very little publicly and making vague statements online. The decision to part ways with Furlong comes just months after GameStop reported its first quarterly profit in 2 years while he was at the helm. Being part of the leadership shuffle, Alan Attal, a former Chewy executive and current member of GameStop's board, was named lead independent director of the board, the filing said. I think what I'm reading here is where because it keeps going in as like, oh, it was the first quarter. So what this actually is a story that's been updated like 4 times with new headlines. Often on Bloomberg on earnings release, they will show a 1-second chart experimenting with similar may help on key volatile catalysts. Well, I mean, if you really want to watch every tiny little price movement off of a news release, then sure, you can go and watch a 1-minute chart. But at that point, why don't you just watch the orders, right? That's kind of the thing that I find really interesting. Is that, again, like, what happens to price is random. There's a lot of randomness in price, but in orders is not as random. There's a lot more stylized behaviors that you can pull to understand what's going on in the market from the orders. And so what would be more useful to you in a situation like that is to have like your your reconstructed tape or whatever, have it really big, and maybe even have multiple ones so that you can kind of see the pace of the orders that are coming in and watching the waves of buying and selling to see what's going on. Because another way of approaching this is that you have to realize how price insensitive most players actually are. Like, think about me. I am kind of price insensitive often. I mean, I don't sit down and say 113.12 is too high of a price because of this valuation model that I have. Like, who does that? Nobody trades that way. Anybody that would try to trade that way would realize very quickly that the market doesn't really actually care about what your quote unquote true value actually is, right? So what does Seth do? Seth just says, okay, at this point, I'm pretty sure that there are going to be more people buying in the future, or there's going to be more people selling in the future, and I try and work myself into the order flow as best I can in the spot that it's at, right? The exact number doesn't necessarily matter. I mean, how far away it is from the highs maybe matters a little bit, but the primary thing that matters to me is how well I can predict those future orders, right? Think about the index fund, right? He needs to buy a certain amount because he's rebalancing his portfolio, or he has to adjust to the market moving, right? He doesn't care that it's 113.12. He doesn't care that the difference between 113.12 and 113.11.5. He doesn't care. He doesn't care, right? So, and it's the same thing when we come in and there's a news event. Do I care the exact price that I get? Not necessarily. What I want to get in as early as possible so that I can get in before all of the other orders and maybe get out before, it kind of slows down, right? So in those really fast news events, like charting out every little price movement, because you could come in and you could add a 1 range chart to it, right? And then that would allow you to see literally every price movement, right? It is just not really very useful because most players aren't price sensitive like that.
right? So what you really want to know is, were they buying or selling, right? Because these guys are going to make a determination about what the future flows are likely to be based off of that piece of news, and they're going to take the price that they get. So which prices they happen at might not necessarily matter, but whether they were net buying or selling does, right? And then it doesn't really matter until you get to the point where there's like large transactions in a spot and you create the liquidity hole, right? Sorry, I'm looking. I had a thought and I was just looking something up real quick. I'm not finding what I wanted to find though. Looking at the 30-year chart, I can't deny technical. What are you talking about? I still have my volume profile up over here. I tell you what, like one of the more interesting things about yesterday was how much the 30-year moved. Because we were moving down, but it still steepened. Okay, I totally lost my train of thought. Oh, right, because you were talking about the price movement after. Yeah. Anyways, orders are what matters. On the GameStop thing, my point with the GameStop thing was like, GameStop is still having problems. I was at a GameStop the other day, and I was like, it's the same store, if not less interesting to me. And I remember when they opened, when this was all going on, they were having all these talks about how they were going to revitalize the store and keep it relevant despite, you know, all soft, you know, since most of the sales going digital now. And it's just not happening. And
I'm concerned that what has happened at GameStop is like they've bought into their own hype. They're wasting all of their time with all of these harebrained schemes that are coming from the apes, like NFTs and this kind of BS, instead of actually like building up a business that's sustainable, right? So some people will say, "Oh, this is a success for Citadel." And I would say, no, it's not a success for Citadel. It's a failure for the apes. Pivots. So you're talking about floor pivots is an interest. So let me tell you something, guys. The market is very statistically efficient, but the market cannot be statistically efficient against all patterns all the time. So it will switch, right? And the market seems to do this thing where it will like pick one strategy, and it seems to be, it's like whatever is the most popular thing amongst retail traders, it will pick on that strategy and it will just hammer it so hard. So it used to be that it was floor pivots. And I can remember times, especially when I really first started to understand this order flow stuff. I remember this one time in particular where, a couple of guys on Twitter, they were kind of influencers, but they were more in the trading psychology space. And they were trading with floor pivots. And so they were giving all of their members these alerts that like, oh, here's a floor pivot and we're going to reverse here, right? And I knew that there was some passive flows coming through that day. And so I traded right into those pivots, and it was one of the largest winners I ever had. Right? Now it's price action. I can't tell you how many people I've seen starting to complain. Like you're starting to see it now, right? In 2021, it was like, everybody was talking about price action. And now in 2022, all of the new people are complaining about how their price action setups aren't working and they think they're doing something wrong, right? No, I don't think anybody provides open interest. So there are some indicators out there that have names like open interest or similar that kind of claim to be that traders think are giving them that kind of an information and aren't, right? So like I think the one that I see a lot is on balance volume, right? Well, you have to realize that on balance volume just has to do with like whether it was volume on an up or a down bar. So it was like not informed by order flow, right? We have the order flow data, but the data that we have does not tell us whether those orders were opening or closing positions. Now, there was a study last week, Zero Hedge posted about it. It was an analysis by I think JP Morgan or Bank of America, one of those banks, and kind of looking at 0 day to expiration and options in general and analyzing the order flow. And they had order flow data from the exchange that included whether the orders were buy to open or buy to close and whatnot on the options. So they could actually see when people were opening and closing positions. And it was very, very interesting. I don't remember what the big takeaway from that one was, so, but I guess that means that it wasn't that. I didn't see the relevance of it. Yeah, because here you can have like the commitment of trader reports, which is kind of open interest, right? You only get it once a week and you're only seeing the data from a week ago, right? Why would that make you feel stupid? Okay. So Walter, the stop losses indicator, that is interesting. So the way that works, I've never gotten the. Okay, so first of all, you have to have market by order data, right? So I think you've been around when we've talked about that, but I'm just going to cover again really quickly for anybody that's new. So when you get level 2 updates, it just says there's 2011 orders at 113.09 half, and then now there's 117, whatever the deal is, right? And it just gives me updates on what the total number of orders are out there, right? And so if I'm trying to figure out where I am in the queue, and like the number of orders at that spot decreases, were they orders that were ahead of me or behind me that pulled? There's no way for me to know 100%. I can kind of guess based on where I am in the queue, but I don't really know for sure. So what market by order data does is it tells you which orders are actually canceling so that you can see your exact place in the queue. Okay. So if you have market by order data, the way that the updates come to you instead is they say order with ID blah 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 did this, changed from this many lots to this many lots, or it canceled, or it moved, right? Because you can have an order and the order can move from this price to this price, right? So one of the things that you can see is if you get a market order that was a modify. So if I just submit a market order, then what I will get through the market by order data is I will get a new order. It's a market order. Here's the price that it executed at, right? But if I get a market order that's not new, it was like a modify or a conversion, right? Then that's coming from a stop, right? That was a stop order that was converted into a market order. And my understanding, even though I haven't touched the data myself, I've never gone and paid $100 to get the data to mess with it. But my understanding is that's how they detect it. So the stop loss indicator in Bookmap is accurate. Now realize this is expensive, right? Because you're paying $100 a month for the data, and I think that you have to pay another $50 on top of that to be able to use that indicator in addition to the other fees for Bookmap. But it is a thing that you can do. Now, does it matter? We don't know. I'm gonna bet you. My theory is that there's actually a lot of stop orders everywhere, and that seeing more stop orders in a particular location doesn't really predict a whole lot. But we don't actually know. I would really like to see somebody do a study. This is something, if you're pursuing a PhD or something you're getting into market microstructure, that's something that I think you could study, is to study the market by order data, look at places where there are stops, and see if there are stylized behaviors where the market tends to behave a certain way when there are more stop orders being triggered, or to identify locations where more stop orders are triggered, right? There's a stream that streams a Bookmap screen with audio alerts for NQ, and they do seem to be everywhere. I'm sure that there are a certain amount of stop orders at almost every price, right? But there's probably also going to be an aberration where, like, there will be one spot where the number of stop orders is just obscene, right? And then the question is, like, do those ones tend to be in a certain location? Do they tend to predict certain kinds of movement? Yeah. See, from our perspective, when we're looking at orders, a buy is a buy and a sell is a sell, regardless of whether it was triggered by a stop, right? And so the key question still is, can you predict the future orders, right? Yeah. And the thing is that, it might seem like stops are like a big deal, but it's trivial compared to that big, large meta order out there that has to buy or sell 100,000 contracts on that day, right? And this is where I think that so many of the ideas that people have about markets kind of end up falling apart, because they could be right about certain things, like, maybe there are more stops on a breach of the high or low. I mean, that seems like that's probably true, right? That if you break a new high or low, like if it's the first time that you're breaking the high for the day, that, it's been a long time since we were at that price, there would be a lot of stops there, right? But in the end, it doesn't end up being that useful, because the number of people trading off of that is just pales in comparison to when a large meta order comes through. And so you might have these dynamics that are kind of going on all the time and are kind of like happening under normal action. And it's just that when that large meta order comes through, it washes it all out. It makes it so that all of those other kind of statistical things that you might see end up not mattering. And so when you try and go through a large enough data set to be able to actually prove some sort of a market behavior that you think will be in the statistics, you're not able to see it in the statistics, right? It gets hidden because of the meta orders. Which is why I kind of am continually coming in here like, like when somebody comes in and they like take a tick out. Okay, well, like you took a tick out, that's just noise, right? I mean, if you took a tick out because relative to this instrument and all of these other things, this price was low, and if you can get filled there, that's a really good, that's great, right? But when people take a tick out because like some price pattern or something like that, I'm like, it's your noise. You're looking at noise, right? And I don't really know, that's why for me, it's like, it's got to be at least a basis point. Like if it's not a basis point move in the treasuries, I don't care. Because if it's at least a basis point, then that means that there's an actual real flow coming in, right? Use data bento. Well, there's a couple of different ways to do it. Anyway, MBO data is really, really interesting, but we have yet to have any kind of empirical evidence that shows that the additional data provided by MBO is actually useful to retail traders. It would certainly be useful to somebody programming a robot market making strategy, because knowing where you are in the queue and how likely you are to get filled, you can factor that into your strategy, and it means a lot, right? Oh, so you can get a couple of gigs for free. Sure. The thing is you want a lot of data to do it, right? If I could get like MBO data for like 2 years. And then you do the... Oh, okay. So a headline here I've missed. Trump notified he is target of criminal investigation. Indictment may be imminent. Yeah. I would prefer that they don't do that, because I think that that's just going to help him. Yeah, 125 per gig, but I'm not sure how many days that will get you. It actually probably will get you a few days, because I record all of the everything that happens, all of the data that I'm getting. So it's not MBO, but all of the data that I get, I export it to a file, and it's only a few megabytes per day. It's not going to help him if they actually convict him. It might be right about that. I think there was a poll the other day that showed that like 70% of voters said that Trump shouldn't be allowed to be president if he's convicted of something. But I think there's a problem with that, because it kind of depends on the crime, right? Like if Donald Trump was convicted of murder, then yeah, for sure, like nobody's gonna vote for him, right? But if he gets convicted of some sort of niche process crime, like documents, right? Okay, so here again, this is one of those things where like Joe Biden did literally the exact same thing that Donald Trump did. He kept documents in an unsafe location that he was not supposed to have, right? So if Donald Trump gets convicted over it, would it actually change the election? Not so sure it would. And then at that point, then he gets to claim that, you know, the establishment is out to get him, that he's, you know, then once he can start to claim martyrdom, because again, remember, when they raided his house, it increased his support. You know, like I wasn't really too concerned about will Donald Trump be the Republican nominee again until that happened. And then when that happened, like support for him just was through the roof. This is one of those things that keeps popping up. I've seen a lot of people say the FBI and CIA won't let Donald Trump become president because they know that if he gets in, he's going to be a wrecking ball, right? Well, so first of all, if you are one of those people in the FBI and CIA, the recommendation that I would give to you is that it's going to happen one way or another, and that, you know, you don't want to be caught in the forefront of it, right? Because any Republican that comes in is probably going to try and reform the CIA and FBI. And I think that even Democrats are kind of starting to get in here and being like, this is a little bit of a problem. There's going to be a change. There's going to be a change. Okay. But the other thing is if I was trying to manipulate an election like that, the last thing that I would do is prosecute Donald Trump for some crime. Because every time that's happened, it's helped his support. Like that's what you do if you want Donald Trump to win, right? Nah, if the deep state, quote unquote, is going to manipulate the election, they're going to do it through some other means, right? It'll be through some sort of natural disaster, some sort of national security matter that makes Donald Trump look like a poor choice, right? Kind of like how it happened in 2020, right? Oh, we have a national pandemic. We need to change all of our voting laws, etc., etc., and then that led to, you know, changes in voting behavior that very, very much worked against Donald Trump. I'm not saying it was a conspiracy, but I'm saying that if the FBI and CIA was going to try and manipulate 2024, that would be the sort of thing that they would do. Well, now we're here at the highs, and it looks like they're going to bust through. This here in the first 5 minutes of the S&P 500 open. So we never got any kind of action before that. I am seeing pretty steady buying in the 30-year though. Yeah, probably some stops on that. Again, the thing that we continue to see in this market is that liquidity is pretty good, and that when we breach new highs, I'm seeing 2,000-3,000s trade at a time. Good morning, Ismail. Another thing that would make my day really sour is if this ended up being like a monster move and I didn't take anything from it. But for now, I think I'm okay. Kind of sitting here watching this happen, and you can see that they did tick back down, and that there's a lot of volume trading on the sell side. So I'm not saying that the trend is going to continue pushing up, but I'm going to say it's not just purely one-way flow. Now, on that note, on the politics thing, the other thing I've been seeing is like, you are starting to get some Republicans start to go, oh, yeah, if I want to become the nominee, I need to attack Trump, basically. So now you got like Chris Christie coming out and claiming that he's going to be the anti-Trump candidate. And just having watched, because, you know, like he filed the paperwork, and I guess Chris Christie is like officially kicked off his campaign and stuff now. And what I saw from like the first opening salvo from Chris Christie was not very effective, I felt. So like if you go over to patriots.win, which is kind of what the Donald subreddit morphed into, okay, they went independent, they created their own website, it's patriots.win. They were talking about, like, Chris Christie was on a news, well, so Donald Trump was making fun of Chris Christie at a rally, and it was with a meme that somebody had posted where Chris Christie was like talking to people, and the whole time it had him holding a plate, like that he was eating food while he was doing the thing, right? Because the joke is that Chris Christie is fat. And then when Chris Christie was being interviewed, when he was being interviewed by on TV, they asked him about that, and they showed the meme. So like, if it turns into like childish infighting sort of a thing, it seems to be advantage Trump right now. And the argument that I would still continue to make is that if you're going to go after Donald Trump, you really need to have an effective argument that strikes at the heart of why he was popular, right? So like the whole thing with his former press secretary, him going so hard against his former press secretary, I think that's a much more effective attack. Is because this is a way to show that, like, look, Donald Trump doesn't actually care about you. He just wants power again. And he's willing to attack anyone and everyone along the way to try and get it, including those that have been the most loyal to him and that aren't doing anything wrong. Right? That is an argument that I think might be effective against, Donald Trump. But we'll see. We'll see. Okay, so there was a lot of volume there, and then they pushed up even higher. Now, it looks like there's a bit of backwash here. What was the lowest that this got? 04. It was a tough one. I think that, so if I was just like watching the flows, I might see this little move right here, this little move up, and say, okay, maybe there is a buy meta order out there. But then it was flat for the longest time, and it kind of went against you before going here. And was it like when we got here that it was a really good trade? Nah, not really. When it got here, so now after all of that, when it lined up to break the new high, I probably could have taken that one. I think normally I probably would have tried that, but I'm being a little bit more passive today because I'm going to be going on vacation. So, but anyways, so the concern that I have now is that if I were to take a trade right here, that they will retrace this back to 13. Because that's one of the tendencies that you're gonna find is that, like, if there is an as she goes kind of trade and you hold it for too long, it will come back. And there was definitely a lot of flow as they pushed up through there. Now, the other thing that we could look at is yesterday's move. because this looks like this is on track to retrace yesterday's move. Right? We're in single prints area. So the next benchmark is 19.5, which is only a hop and a skip away, right? Okay. And now I want to read a story here that I've seen that I missed yesterday. Goldman Flows Guru, we are in inning 7 of the force in with a blow off top at the end. Look to fade this rally higher. It is a great American pool party as investors wait for the new bull market headlines to hit their Bloomberg terminals. This is the number one incoming question. Who is buying up here and how high can we go? Is it 1999? Fear of cash, underperforming Standard & Poor's 500. Is that the new trendy word alert? Focus, fear of cash, underperforming S&P 500. The pain trade and path of least resistance remains higher. Think rip and dip for most investors. In baseball terms, I think we are in inning 7 of the force in with a blow off top at the end. I am looking to fade this rally higher. Flow of funds, technicals look favorable for the first half of the month and then become less favorable. The negative sentiment and short UW positioning dynamics are quickly getting reversed as everyone is back in the pool for summer. My swing factor remains retail traders as they continue to remain buyers of high flyer call options. Last week, global tech funds logged $8.547 billion worth of inflows. This was the largest weekly inflow on record. Wow. There's a bunch of data here. Corporates peak open window, blackout window starts 6:15. I see. CTA positioning in US equities is now at the highest level since January 17th, 2022. In other words, everyone is back in the pool. Global CTA modeled flows for the next 1 week and 1 month. Over 1 week, flat tape 3.7 billion to buy, up tape 13.5 billion to buy, down tape 26.3 billion to sell. Okay, and they give thresholds. Short threshold 41.45, medium threshold 40.85, and long threshold 41.50. Okay. Bond CTA. This might be the most important chart of my deck today. There is a significant amount of bonds to buy. NAS plus ARC should like that. Ah. Interesting. Okay. So the CTAs are coming in long, are they? So 115 even might be in our future. That kind of puts me back into, okay, like we want to favor longs. Maybe not at the moment. I mean, it kind of looks like they're probably forming a liquidity hole around 16.5. It's not quite there yet. U.S. equity sentiment has dramatically improved and is at the highest level in 627 days. Not that short anymore. Discretionary shorts have largely been covered, with the U.S. equity futures positioning being basically at zero on that chart. Dealer long gamma positioning locally continues to build. In other words, they're starting to go long gamma, which means less volatility, generally speaking. But that creates a situation where if the S&P 500 were to take enough of a tumble for the CTAs to come in short, and there's certainly the possibility of that happening later in the month when the blackout window starts and so forth, then a breakout could lead to a lot of gamma coming in. But until then, you'd want to be like selling options, right? Kinked FOMC 614 and CPI 613. Reminder, there are a lot of holidays, long weekends, and the vol market is rather muted for June and July. Okay. So they are definitely expecting like big action next week. Wow, they come right back up there so fast. And still pushing. Yeah, they just plowed through 18.5 and 19 like there was nothing even there. And look, there's a level break setup right there, and let's see if they fill me. Nope. Well, I feel like it's one of those days, but so far that one's not working. So yeah, that was the end of that note. Let's see here. Initial jobless claims surged to the highest since October 2021. They surged up to 261, up from 233 the week prior, and well above the 235 expectation. This is the highest since October 2021. That is the biggest week-over-week rise since July 2021. We await remarks from some states to explain away this move, but for now, Ohio, California, and Minnesota saw the biggest increases, but nothing looks like an outlier. However, continuing claims fell last week to 1.757, the lowest since February 2023. Is this the turning point? Question marks, asks Zero Hedge. Back from the dead, Carvana shares erupt after company reports improved financial outlook. Worse than yesterday. Dense wildfire smoke moving over nation's capital. Okay, so yesterday... I made a big deal about, like smoke happens, don't be such a baby about it. I hold to my original assertion that people in the East Coast are being babies and that smoke is a thing that regularly happens and you'll get over it. But there is a lot more smoke over there than I thought there would be. Like those pictures from New York were like, whoa, that is actually pretty bad. That's some insane wildfire that's coming through for it to be generating that much smoke that far away. Because I've only seen smoke like that when it was actually happening like here in the valley, you know? I guess what it really is that it just irritates me that whatever happens in New York is like national news. So like when it's happened in Utah before, like nobody cared. Like that's just regular life here in Utah. Yeah, you don't necessarily want to go outside. Well, I tried going for the level break setup in there and it did not follow through. I may as of yet get filled, but so far I'm gonna say that was a fail. You guys need to say something else so that the last message doesn't say stops, because every time I come over and look at that and I see Uzi said stops on that, I'm a little triggered. Like, there's stops? Where? What? Why? What's going on? Oh yeah. Okay, so there's this dance music act that I haven't heard as much from lately, but when they were hot, oh man, they were so hot. Galantis, they were the ones that had that song, like I wanna run away, and they had this one song that was like, spread it like peanut butter jelly, spread it like you owe me some money. Oh, it's such a good song. Oh, I want to listen to it now. Too bad I can't play that stuff on the stream. Let's come to Reddit and see what they're talking about today. Mike Pence would rather see armed school guards than gun control reforms. Yeah, that's because most of the gun control reforms that you guys are proposing wouldn't do anything. Hey Adam, how's it going? What's this? Bitcoin quoting Paul Krugman. Second, rapid growth in a sector isn't necessarily a good thing for the economy. Until recently, for example, there was an explosion of resources devoted to Bitcoin mining. As far as I can tell, those resources produce nothing of value. Sorry, crypto enthusiasts. Bitcoin has yet to show that it is useful for anything besides money laundering, and the Bitcoin boom has both inflicted environmental damage and consumed resources that could have been used to produce things that are actually useful. Yes. Which book did you download? The Trades, Quotes, and Prices one? Okay, so I understand why you're saying that. So, because you know it's hard math. Now, if you did not take calculus in school, I wouldn't call myself. I these models that they talk about in this book, there's no way in a million years that I would have figured that stuff out on my own. No way. It was funny. I actually the other day I took some sort of like test assessment sort of a thing, and like I got 100% on the logic questions, but I only got like 50% on the math logic questions. So I was like, I felt a little rushed. Maybe if I had more time, I could do it. I'm not the strongest actually in the math things. Like I can understand them really well if you give me time, but like I'm not necessarily the quick thinking sort of guy like that. You know what I mean? Oh, I got a degree in computer science. So we did have to do calculus. We had to do differential equations, which is like crazy. Ugh, I tell you what, if you were unsure about how good you were with the calculus, going back through differential equations will make sure that you brush yourself up on your typical integration and derivation rules. Good grief. And then at the end of it, they basically show you, oh, but you can actually do it with matrix math and it's easy. And you're like, then why did we waste all of that time? Ugh. Okay, but if you know basic calculus, then you're going to be okay. And what you should do when you're reading that book and you don't understand what's going on, just keep reading. Just keep reading. Because the book is very, very good at explaining to you the takeaways from the research that they're talking about. Like you can go to the end of every chapter and they have like key takeaways. Those are important, right? So you just keep reading. And the other thing is that the book is something that kind of has to be looked at as a whole. It's kind of one of those things that they kind of hint at things at the beginning of the book, and then you see them later. And so they're teaching you a lot of stuff at the beginning that don't really make sense in context until you get the later information. And so then when you go back and you read the book again, then it's like every single word in this book is brilliant, sort of a thing. So my recommendation is to just keep reading and power through when they're deriving stuff and you don't understand what they're doing, because they will explain to you the takeaways. But it's not one of those, it's not casual reading. I'll give you that much, right? It's kind of a book that you probably want to have like a pen and paper and take notes as you're reading it and that sort of a thing. And you're going to have to like set aside actual dedicated time where you can sit at a desk and you can actually focus on it and that sort of thing. It's real serious stuff. But that's what makes it so different and so special from all of the other stuff that's out there on trading. And that's why the most retail traders don't know about it, because it's too hard. Okay, do you use a stop loss or do you look for the moment when your plan is not going to work out? Basically, yeah. So, in the micros, yeah. So here on this sim trade, I don't actually have a stop loss. But I definitely do have like an amount of money I could lose on a sim trade where I'd say that's too much. Like if this were to go to like minus 500 to 1,000, then I would puke it. But when I'm over here in the micros, I'm very concerned about just putting a stop loss order out there because the liquidity is light, right? So this is kind of a tough thing. Now in the micros, I'm trading so small that even if the biggest move possible happened to me, it would be minus $50 and I would be okay, right? So I wouldn't necessarily recommend trading without a stop, but just realize the reason I do that in the micros is because the way that the liquidity works, you can basically, you have to get out where it lets you out. And as you trade it and you watch the liquidity, you'll kind of learn how that works. But typically speaking, if I was placing these trades in the main treasury and I was doing this kind of swing in the main treasury, I would have to have a stop somewhere. It might be like really far away, so it's only an emergency stop, but because the last thing you want to have happen is unexpected news comes through and you lose 5K or something, right? Because that can happen to you. Okay, so they had satellite footage of the fires starting in real time. They were all simultaneous. So, not quite. So I've seen that video that you're talking about, Uzi, and just from being in the West and kind of having some experience with this and everything, that's how it happens. Is like, there was a storm and the storm had already passed, right? And then long after it was passed, then you could see the smoke that, the smoke plumes develop, right? So the thing is that the conditions that create one fire will tend to be over a wide area, and so you'll usually get multiple fires started at the same time. Like I cannot think of any time when there was fires in Utah and we were talking about it and there was just one. There's always more than one going on at a time, right? And yeah, it'll start in like multiple spots. And the thing is that there was a thunderstorm, but you're not actually able to see the smoke plume until it's been going for like a day almost, right? And so that's why when you're looking at the satellite image, it kind of seems like they were just all simultaneously started out of nowhere. It's because the storm had already passed on the radar before that point that you start to see the smoke plumes. So I think that the assertion that satellite imagery is evidence that the fires were intentionally started doesn't pan out with what I know about forest fires. And not that I'm a forest fire expert, but apparently I'm more of a forest fire expert than most people out east, because we have forest fires out here in the west all the time, right? And but the thing that is weird about this is how big and widespread it is. Like to be having a fire over here in Quebec and to have the smoke as bad in New York as it is really quite striking to me. Because like I said, the only time I can recall a forest fire smoke being that bad in Utah was times when the fires were like there in the valley. Well, you live in the lightning capital of the world, but you're also live in a state that's half underwater, so it's kind of a different thing, right? I'll say something else here, by the way. I would expect more. So if we're in an El Nino, so let me show you this, something I've learned about this, okay? And I've learned this recently, so I apologize if my like description and explanation of this is like way too basic, okay? But we need to get out here. We are in an El Nino year. So last year we had an El Nino where El Nino had happened like 3 or 4 times in a row, which is extremely unusual. So what does that mean? It's basically, they're talking about, is the water down here really hot or really cold, right? So when the water down here starts to get really warm, what happens is you get a lot of evaporation and you get a lot of storms that come up through here. But the other thing that kind of happens is it kind of like pushes the storms down. Okay. So basically you get more storms, but they're all coming down through the southern United States. And so these areas in the southern United States that have been like so dry the last 5 years are more likely to see water over the next year than they typically are, because it's an El Nino year. Okay. But for these guys up here, they're likely to be dry because all of the storm systems get pushed to the south. Okay. So here you're having the forest fires over here in Quebec, and it's flying over to New York. What the weather patterns are suggesting is that the entire northern United States is likely to be drier than it typically is in the next year. And so I think you could probably see quite a lot of forest fires over the summer. So I don't know if there's any way to make money off of forest fires going off in New York, but I think that, you know, if this like dies back, that there might be a trade there. Okay, what is the most informational book or something else that improved your drink? Well, that book was definitely the most informational thing. So let me read something to you from this book, okay? Long number. Yeah. Okay. Which one is it? Okay. I think it's chapter 19. Chapter 20? Ah. Where's the part that I would read to you out of this whole chapter? Okay. If order flow is the dominant cause of price changes, information, quote unquote, is chiefly about correctly anticipating the behavior of others as Keyes envisioned, and not about fundamental value. The notion of information should then be replaced by the notion of correlation with future returns, induced by future flows. For example, when all market participants interpret a positive piece of news as negative and sell accordingly, looks like my camera died the battery again. For example, when all market participants interpret a positive piece of news as negative and sell accordingly, the correct move for an arbitrager is to interpret the news as negative, even if doing so does not make economic sense. Of course, if all market participants are rational and make trading decisions based on their best guess of fundamental value, order flow will just reflect deviations from fundamentals and the efficient market picture is recovered. In a market where price formation is dominated by order flow, the difference between a noise trader and an informed trader is merely the strength of correlation between the trader's trades and the future order flow. This allows informed traders to forecast future price changes. For noise traders, there is no such correlation. The short-term reaction part of the impact is, however, similar in both cases. In the long run, the price slowly reverts to its initial value for noise traders, but retains a permanent impact component for informed trades due to the continued pressure of future order flow. The propagator model suggests an even more complex picture where the impact of all individual trades tends to zero, but the long-range autocorrelation of trades causes order flow to create a non-zero contribution to volatility. It could well be the case that even random trades have a small but non-zero permanent impact. This is what happens in the Santa Fe model, for instance, where all trades are random, but the rest of the market acts as if they contain some information. As the model illustrates, random trades are enough to generate volatility. This is also the case in the Kyle model. If we also assume that market makers think there is information when actually there is none, in the absence of strong anchoring to a fundamental value, the price ends up wandering around because of the order flow itself, with a volatility generated by the price formation mechanism at the micro scale. Perhaps the most relevant contribution of the field of market microstructure to this debate is an understanding of the order of magnitude of price impact and its slow decay, both of which reveal that even small trades impact prices. The order flow theory of price changes opens the door to a quantitative, principled understanding of the various self-exciting and self-referential effects in financial markets. These effects are probably responsible for the most salient stylized facts of markets, including both volatility clustering and the heavy tails of the return distribution. That's page 376. Chapter 20. Chapter 20 is, I think, the most important chapter in the book. What's your main job? I am a site reliability engineer. You guys have been asking me that a lot lately. What's with that? My current job title is site reliability engineer, which apparently is a prestigious title right now. It's kind of funny because site reliability engineering is one of those things that like you get dragged into usually, but it is what it is. Oh yeah, I see Gustavo messaging me that the satellite thing. That's what we were talking about before. I was saying that's the way that it works. That I'll show you this, even though some on TikTok this has been getting taken down. Okay, so you see this right here, this formation right here. That is the storm, right? So the thunderstorm has already passed, and you don't actually see the smoke until much later. Essentially, it's not big enough to show up on the map. Okay. And yeah, if that whole area is dry and there's a thunderstorm goes over it, you're likely to see multiple fires. But again, the thing that I find unusual about this is the magnitude of the fire. That it's like an extremely wide area that's on fire. That's seems a little unusual. If a thunderstorm goes over, does it still dry out though? It can be, actually, yes. So I don't know how strong of a storm that was, but yeah, the thing is like you have wood and especially like the stuff that's on the ground, right? When that's completely dried out, and I mean like completely dried out, a thunderstorm comes over and it just kind of gets the top of it wet. It doesn't, it doesn't really like soak in, and that stuff is just like tinder. Like it just goes up so easily. So I don't know what the state of the forests in Ontario are, but I would guess that they probably don't get forest fires too often up there, right? But I mean, yeah, that doesn't make sense. Okay, so like if you have a log, like I'm not an expert on this sort of a thing, but this is what I think happens is you have a log like this. Okay, this thing is completely dry. Okay, if it rains, you only get this wet. You only get like wetness through here, right? Your point about Florida being basically underwater for the reason we don't have mountains of forest fires despite repeated waves of lightning strikes doesn't make sense either. Well, no, but you don't almost never get those kinds of dry conditions in Florida, right? No. Like here in the West, it's kind of dry all the time. So there's always some forest fires, right? And yeah, they do get started by thunderstorms. Meaning that, the places where the fires start are maybe had a little bit of water. I mean, if it was like a monsoon, then you probably, this is the other thing that might confuse you, Uzi. I should say it that way, but you see, you live in Florida, so you probably, what you think of as a rainstorm, okay? Like what you think of as a rainstorm is like a once in 100-year event here in Utah, right? Like it doesn't. My idea of rain is probably very different from your idea of rain, right? Because when it rains here, you're talking about like a sprinkle, like if you got 1 or 2 inches of rain, like that's a pretty good rainstorm, when you go over into Florida, they're talking about like feet of water sort of thing. Yeah, but think about the entire country, though. Why wouldn't wildfires be happening everywhere? But they are happening everywhere, aren't they? Let's see here. Is there a wildfire map, maybe? Yeah. We need your help. No, thank you. You can be poor. Okay, so here's a map. And what does the blue mean? Prescribed burn. New fire. Doesn't look like they... Oh, what are these colors? .428 active fires. There's a bunch of them in Arizona. There's a bunch in Missouri, Kentucky. It's not showing me the Canadian data, though. Let's see fire and smoke map. That looks a little more promising. Air quality index. Okay, so only showing us fires now. Okay, so there's some fires in Seattle. There's the ones down in Arizona. There's a bunch even in Texas. But look at how many there are up in Alberta. Right. Your area has had 5.8 inches of... Was that low for Florida? Actually, there's a fire in Florida. Spring Hill. Ocala National Forest is on fire. Oh, it says there's a fire over by Tallahassee too. Unless, no, I might not be reading that right. Maybe turn off satellite detections. Okay. Yeah. Now you really get a picture of the fires. Okay. But anyways, what I'm trying to say, like, the important takeaway is that, again, because of El Nino, this area up here is likely to have more fires than it usually does. Like down in here, we have fires all the time, right? Well, maybe not like that. It's more like this area, you have fires all the time. Until you get into the rainforest where Uzi lives. So I don't know. I don't buy the I don't buy the theory that the Canadian government started all of these fires. I don't. If wildfires are everywhere all the time, why is it anomalous whenever they happen? It's not. It's not. You didn't have a theory. I'm working through a question. Okay, I would say that they are not anomalous. But the media treats them like they're anomalous sometimes. You know, like this is the whole thing is like visibility being practically zero in New York. That's a great story for the media, right? You know, did you see the top post on Reddit that was the advertisement for Diablo, and like the whole sky was red? Like that's good stuff. That's, you know, that's something that 5-10 years from now people will look back and be like, oh, that's super interesting. That time that happens in Utah all the time, man. There's at least 1 week out of the year every year that the air quality in the summer in the valley is just absolutely crap because of a fire somewhere. It's usually not as bad as what we're seeing in New York, but it happens every year. And especially over the last few years because it's been so dry. Probably this year it will be a little bit better, right? But what I'm getting at is that it's going to seem to a lot of people, if you live as, you know, anybody that lives up north, anybody that lives up north and on the East Coast, it's going to seem suspicious because you're going to see more fires than usual. Like all of a sudden, it's going to be something in the news all the time when it wasn't. Right? El Nino. It's El Nino. But you know what? I tell you what, I see so much stuff. I used to be so into, when I was a kid, I was so into the weather report. I watched what the weather guy on the local news channel like religiously when I was a little kid. And I've seen so many things on TikTok showing satellite imagery in really deceptive ways to try and prove the theory that like the government is controlling the weather or something like that. So they don't understand how the radar works. It seems to them that like where the radar sites are at is what's creating the storms, when it's just you don't see it because there's not a radar over here. There's only one here. You don't get rain, but last I checked, snow is water. Yeah. So the thing with the snow is that all it has to do is snow like one time in December, and then that's there the whole winter, right? But the amount of rain, like, let's see here. Average rainfall map. Okay, so the average annual precipitation for the area that I live is like 2 inches in some instances, right? Versus where you live, it's more like 261. So for you to have only gotten 16 inches so far this year, that's actually a dry year for Florida, huh? You're on fire with this CF trade. I think that I really probably should have gone long like way back here before it broke out, but like I'm kind of stuck in a situation that we've been finding ourselves in a lot lately, which is like, well, you already had like a pretty strong move and like a breakout, but I don't know if it's actually going to go any further. Like we're very clearly in a liquidity hole. Actually, I should probably take that off there, right? Like for all I know, it's just gonna range here for the rest of the day. That's kind of been its tendency as of late. Oh, okay. So I was thinking like I missed that question. Adam asked the question, are you in contact with any quants? So on LinkedIn, I've just like gone out there and tried to find as many of these guys as I could. And I feel like I've built up a pretty good network. I haven't had much reason to talk to them, but you know, if I had a good reason, there's a couple of guys that I could message that I'm sure would be able to respond and give us good information. The thing that is exciting to me is that I'm getting to the point where I know the names of the people that are putting the research out, and I know where like the exciting parts of research are. So when I see reports come out, I understand like the significance of their findings and stuff like that. You know, like this study that I gave you guys earlier today. I'll give it to you again. Post-COVID inflation and the monetary policy dilemma and agent-based scenario analysis. I think this is a significant piece of research. I hope that it's a piece of research that I hope everybody over at the Federal Reserve reads. Because it it has some important implications for policy. Yeah, that was the picture I was talking about, Uzi. Yeah. Yeah, I listened to you just for this, for the quant stuff, or for learning about forest fires. Do you get? Can you tell how like uncomfortable I feel when I end up when issues that aren't like my primary focus end up becoming the big deal? Subject of the channel and the nuggets that come through. Yeah, I don't like talking about things that are outside my area of primary expertise, because I feel like I see people all the time. Like there's this one guy on TikTok. What's his freaking name? I think his name is like Frank or something like that. And basically he's an Asian guy that worked for Google for a long time, was a total slacker, and basically saved everything that he made and now just lives on it, right? So I think that's why he became famous in the beginning. And he just posts about anything and everything. And some of his takes are so bad. Like sometimes he'll talk about stuff that he really just understands nothing about. And sometimes you might think that you know a little bit about it because you're kind of adjacent. But if you're not really a true expert in the field, you don't really know the extent of it, So like when it comes down to how is it that thunderstorms cause forest fires? I don't think I really completely know. I think part of it is that when you have a rainstorm, it doesn't completely soak the wood that comes through. I had some friends that they would do the forest fighting in the summer. It sounded like a good gig. Like they really enjoyed it. You go, basically you get to camp for 3 months of the year and fight fires, and they enjoyed it, and really good pay for that period. And then you can just do whatever you want the rest of the year. It was a good gig for them. But I don't know as much about it as only as much as I know just as a person living in the West. And so if you're a person living in the East, I know enough to say this is kind of how it goes. Probably going to see more of it this year. But anyways, that study, go read that study. I think it's a good study. Hope the Federal Reserve basic, because it really shows you that like the path that you have to optimal monetary policy is very narrow, and it has more to do with anchoring expectations than anything.
Let's see here. What I often think about is how can one think like the way you are thinking and looking at the problem from your lens? One might read this but not understand what it's really saying. So what are the critical questions one should be asking when reading a document like the PDF you just shared? Okay, yeah, so the reason I'm sharing this PDF, I mean, there's lots of things. In the end, a research paper is just proving something with empirical information, right? So what is it that they actually are proving? Well, in this one, they tell you in the abstract, our main results are fourfold. Without appropriate policy, the shocked economy can take years to recover or even tip over into deep recession. The response to policy is non-monotonic, leading to a narrow window of optimal policy responses due to the trade-off between inflation and unemployment. And the success of monetary policy in curbing inflation is primarily due to expectation anchoring rather than the direct impact of interest rate hikes. The most salient, sensitive model parameters are those describing wage and price indexation. Right? So here's how I would approach it, okay? We're trying to be informed traders, and so it's all about information. Oh, by the way, did we come back up? What was my original trade at? That sim trade, 18.5. Oh, I would have gotten filled. I shouldn't have bailed on it. Oh well. Okay, so how do you judge information? Because the typical person wants to look at somebody else's performance and say, oh, okay, I should listen to the people who have the performance, right? But because skill is not necessarily directly correlated to returns, especially in an environment where for the last 10 years, beta is all that's mattered, right? You have to actually analyze the information that you're getting, okay? And there's three things that I would ask about a piece of information that you get. Number one, is it accurate, right? Number two is it uncommon? Okay, so pieces of information that not everybody knows is more likely to make you money, right? And number three, is it relevant? Okay, is it actually telling you something that could help you change your behavior in a way that might make you money, right? So in this particular instance, is it relevant? Well, it's definitely relevant if you work at the Federal Reserve, right? Because this is giving you information about how the economy works that has kind of been at question, but that the Federal Reserve was aware of. And it really gives you the ability now to really laser in on that particular facet of the Federal Reserve's tools and how to use it most effectively, right? And it also ends up being useful to us because now we can kind of understand a little bit better and predict a little bit better how well the Federal Reserve is doing. So I would say right now that the big takeaway that I'm getting from it right now, if central banks are all having to do surprise interest rate hikes, then that means that the Federal Reserve is not doing a good job at expectation anchoring, and ergo we are likely to continue to see inflation. Right? No. If a stock is $10 and the money supply increased by 50%, does that mean that the stock value increased by 50%, so now the stock is worth $15? Not necessarily. Yeah, I am in Discord. So the way that you should approach it is, if the money supply increased by 50%, how did that money come in? Right? Because that's the first thing that you got to think about, because there's multiple ways to increase the money supply, right? It could come from easing from the Federal Reserve, right? So if the Federal Reserve eases interest rates, what that really means is that the banks have the ability to loan more money out. So small businesses are going to be given more loans. People in trading are going to be given more loans, right? And money comes in that way. But it can also be created by fiscal policy, right? The Congress comes in and puts some money in. And so then the Congress decides which players get the money, right? So depending on the current
macroeconomic circumstances and the way that that money came in might affect which areas and assets that money actually gets put into, right? And ergo, which areas of the economy you're going to see the inflation. And so one of the things that's happened a lot lately is over the last 10 years is that the money was just everywhere. And so all of these venture capital kind of people were just spending money left and right. And it all tended to go into like the same place, which was like the tech, whatever was the thing that was growing the most, it all just went into that, right? And so if you had a stock that wasn't, if you had a stock that was in tech, it would, it increased by more than what the money supply would suggest that it does, right? And if you were in a stock that was like an industrial, which is not as popular, then you didn't see as much of an increase, right? Because what actually matters to the price is the orders, right? So we have to say, here's a flow, which is the monetary easing. Where does that flow go to, and how much is that, and what will that impact beyond those stocks, rather than trying to create some fundamental valuation about, well, if inflation is, if money supply is this much, then we said it's not right. It's not that simple. You should join. Are you saying talking to me, or are you talking to Gus? Because Gus is in there too. He was messaging me. You should definitely get in there on the Discord so that Mr. Certified Dumbass and ProBucks don't continue to completely dominate the conversation. No, I think his name is Gus over there in Discord too. Oh, it's slightly different. I know. If Gustavo wants to talk to you, maybe he can say something in like main chat or something. I want to teach them. I don't know what is he going to tell you? Opinions on modern monetary theory. Okay, so I find modern monetary theory to be a fascinating subject, actually. So I'm very much opposed to modern monetary theory. The thing is that they have kind of understood a couple of things about the way that our monetary system works that many other people are kind of still in denial about. For instance, on the conservative side of the aisle, a lot of conservatives still think that we live in a fractional reserve system, but that's really not what it is. The banks just create the money when they want it. They don't have to have, no. The way that it basically works is they just create new money out of thin air on a balance sheet, and that's how it gets created. So they're kind of right. The modern monetary theory people are when they say that, like, okay, you can come in and you can spend money, right? And then, of course, with the government spending and all of the stimulus that they're going to put into the economy is going to create inflation. And so how do you fight inflation? Well, you could raise taxes, essentially, right? The reserve requirement ratio has only been 0 since 2020. Yeah, but when you actually look at like what is the process that they go through, it's not like the bank has to wait for somebody to deposit funds first, and then that clears, and then they can take that money and go and give it to this guy, and it doesn't work that way. You make a loan and they go into a spreadsheet and increase the number. Okay. Yeah. Anyways, the problem with modern monetary theory is it's short-sighted in the larger picture of things, right? Because really, what is the net effect that you're doing? Like, think about it. If I'm coming and I'm taking more money out from taxes and then I'm putting it back over in some other spot, what is like the actual net effect of what you're doing? Well, really what you're doing is you're redistributing wealth. And not necessarily from rich people to poor people, but like from one industry to another industry, right? So what you're doing is you're giving the government more say over where things get invested. And that leads to malinvestments, right? So the net impact of modern monetary theory would probably be, number one, less growth, right? Number two, when the government really pushes industry down a certain direction and then that falls apart, then you have really, really bad financial crises, right? So that's kind of a problem. And there's also like secondary effects from these things that the modern monetary theory people don't really think about, right? Like like interest rates, for instance, you know. You go and you do so much spending and so much deficit spending, and then take it out in the form of taxes so that you have lower growth overall. That's not going to keep interest rates low forever, and you can't keep interest rates low forever, because if you start to see inflation and then you tell the central bank to continue to stay low, then you get Turkey, right? That's how Turkey ends up in the situation that they're in. And then there's impacts on your money, right? Because why am I going to keep my money in the United States if they're going to tax it, and all of these sorts of things, right? So in a modern dynamic economy, like modern monetary theory could maybe in theory work if you like controlled every country in the world, and they were all doing modern monetary theory. But that's not the world we live in. If that was the world that we live in, why would you even need money at all? Like why would you even need a financial system at all? You would just give people credits and the government could decide everything, right? So I really think that modern monetary theory is like short-sighted. It reeks of somebody. I mean, Stephanie Kelton is the person that I think everybody really talks about the most with that stuff, right? She's not worked in the industry really, from my understanding, right? Like she's a professor, right? And I think that's a lot of what's goes. All of the people that I see, because there are people out on social media that are just like modern monetary theory influencers, right? Like there's this girl on TikTok that got picked up by the Young Turks, right? It's just for economics, right? Well, she does have an economics degree, but like she got the economics degree and then never did anything with it. You know how many people I know? Like I know at least 3 or 4 guys, I think, that they were economics majors, and then they didn't do anything at the industry level with it, right? That actually happens a lot. And the sad thing of it is that it's the industry where you really learn stuff, right? So you have all of these people that were educated in academia but don't really understand how things work in the business, in the real world. And when you're talking about business in the economy, and until you've been in the real world, I don't think you really understand what's going on, and that's how ideas like modern monetary theory are able to spread and thrive, right? Is on everybody's lack of the collective lack of experience on a very complicated topic that very few people are truly qualified to be speaking so boldly on. Like, yeah, we talk about monetary policy all the time, and we can talk about everything that we know about it, but in the very end, we have to admit that our ability to predict what's going to happen 2 years out is extremely limited. Oh wait, did we move higher here? Oh, ZB did. Oh wow, ZB really moved. I did not catch that. So let's see here. Where were we at when we initially? I think there was 3.75 was the spot that I could have done. I'm okay. Like, again, I didn't really want to take on too much risk. And like, look, the one thing that I did decide to do over here in sim didn't work out, and then it went higher without me. So like, I'm okay with not taking some trade, but this is quite the turnaround. So let's come back here to ZN. Yeah, they have cleared through the single prints. So, you know, yesterday when we were saying like, oh, all of the central banks are getting super hawkish and everything, and we're probably going to see higher interest rates. And now all of the sudden the labor market is actually starting to show some signs that it is indeed slowing down and that recession is coming. Right? So that is quite a jarring reversal. I'm not going to say that that's like an unusual move for the treasuries, because it's not. It's not. But like, I feel like in terms of like market narrative, that's a really jarring change. What about Japan? They have been near zero forever. Okay, so that's a good example for sure, right? Because there's been a lot of negative effects on the monetary policy in Japan, right? Like, they're not growing, and in fact, their population has been in like decline more so than other countries, and they can't, like, people can't invest their money there in Japan. Like, all of their pension funds have to go and buy US treasuries because the Japanese treasuries are no good. And like the Japanese central bank basically controls the entire market, right? Okay. Extrapolate that out another 50, 100 years, right? That's not good for Japan. Right? Japan eventually has to get to a point where they start to generate more economic growth and they can normalize interest rates. Eventually that has to happen, right? And the modern monetary theory kind of idea of things is, oh, we can just keep interest rates at zero and borrow stuff forever and it'll be fine. Well, there's one impact, is that it affects people's investments, and people end up having to invest more in order to retire, and that hurts growth. Government is in charge of more money, that hurts growth. Government isn't very good at allocating capital, that hurts growth. And so you end up with centrally managed economy that doesn't grow, and everybody's frustrated with. Well, I'm sitting here trying to figure out if like they're going to be able to continue to push up. So we should probably read some deltas. So when I look at the order flow for the day, we're actually still about where we were after the news in terms of net change. So we went from negative 78 to 68. So about 10,000 net contracts. Okay. So it seems to me that we are having some pretty strong jarring moves because of currencies. The actual change in the Treasury futures continues to be a little lackluster. So I would be very hesitant to say that this action suggests something about what will happen in the next Federal Reserve meeting or anything like that. But I think you're probably going to get some good trading opportunities while I'm gone. I'm kind of wish that I wasn't taking the vacation next week, but I do want to do it. Yesterday I was getting one of those. I've maybe this is all in my head. I'll get stuck on something and then it's like I just get obsessed with it, right? But for a long time now, recently, it's felt like when I go to work out, I was just too exhausted to do it. Like it just didn't feel good. You know, it'd feel kind of nauseous and fuzzy and I didn't want to work out. And it's like, oh, you're just being a baby. You just need to push through it. No, it just really didn't feel good. And I started to think maybe I'm missing like something in my diet.
And so now whenever I start to feel like that, I'll drink some Gatorade and I feel better. And I think it's the electrolytes. So yesterday I started to see a visual aberration, like flashing zigzags in a circle on my vision, which has happened to me before, but not since, I think that hasn't happened since like I worked at Goldman. And you know, they say that it's something that tends to happen when you're like really stressed. So I take a sit down and I take a big glass of Gatorade, and within 5 minutes it goes away and I feel fine. So I think it's just because I don't get enough salt and potassium in my diet. But it's also kind of like, well, probably is time for a vacation. You know, I don't think that we as traders, because we're in it all the time, I don't think we as traders realize how stressful this is sometimes, right? Because you're so used to it, you know? We're like frogs in boiling water. We don't realize how much stress this is putting us under. Yeah, I tell you what, I have more gray hairs than my dad that did at this age. You can see. Oh, look, I can turn the camera back on. There's a lot of gray there, man. Like, there's enough gray there now that you know, it makes sense for there to use products that are targeting, you know, coloring gray hairs. Like if I was you know, like in the dating scene, maybe it would make sense for me to dye my beard, you know. Yeah, I could eat more bananas. And I don't know if it's the potassium or if it's salt, because it seems to me that if I eat potato chips, that helps too. They might push higher here again. You think that we'll get another stop run before we have to go? Anyways, Octavius, are you streaming tomorrow? I might, but I'm not planning on it. So my wife is a flight attendant, so we have flight benefits. But the way that flight benefits work is you can fly on a plane if there are available seats at boarding time. So what happens is you might want to plan on doing a certain flight, but then a bunch of people book the flight at the last second, and since they're paying customers, they get precedence, and then you don't get on that flight. So you have to be a little flexible on when you go. So the plan was to go later today, but it might not work out that way. It may work out that we go tomorrow. So I might be able to stream in the morning on Friday. Although we don't have too serious, we don't have anything too important going on tomorrow, do we? I think there is a economic number. Let's see here. Oh no, well, no, really not anything. No US news. I tell you what, man, if I didn't stream, I would miss you guys so much. It really is like so mind-boggling to me, the number of you that come through here that have been for years and years. Like Jeremax, I remember Jeremax from like 2018, right? It's been a long time. Because sometimes I get frustrated with things. Like, it's a lot of work to put it on YouTube, and I don't feel like YouTube gives me the traffic I deserve. And I've been harassed by people. Like, I'm trying to do the best thing. I feel that you know, we operate this channel with the highest level of integrity, and we're not pushing all this BS that other people do, and we're very responsible about how we do it. I still get harassed. It's ridiculous, and it makes you want to not do it. But then it's like, yeah, but I love chat, man. I'm not gonna give that up without a fight.
I want to no. I don't think I'll ever do it. So I was thinking about this morning. I was like, okay, so like, where do you see yourself in like 10 years, right? So is that like Seth is a full-time trader? No. I think that I would love to be able to trade until like 9:30. So like another 30 minutes to an hour in my trading day would probably help. But beyond that, I don't want to trade more than that. I mean, what we do is exhausting, especially when the market like really starts moving, and that's too much market. No, I would love, you know, if I was making my full income from trading, which it would is also, I think, kind of a nightmare. But if I was making my full income from trading, I would not be sitting here the whole day doing trades. You know, I would keep doing what I'm doing, and I would use that whole rest of the free time to do other stuff like research, make more content for you guys. Maybe do some things like that get me more involved with the local community, you know. But like, quote unquote, full-time trader, nah, not unless I was doing it for an institution. Not unless I was doing it for an institution. And you know what? I actually think that I could probably trade for an institution and do a really good job now. I think I kind of have the base to be able to do that, but I don't think that they would ever look at me, nor do I have any interest in moving to New York. I mean, if somebody gave me the offer, you know, so like if a recruiter came to me and said, oh, we want to see about, you know, you trading for us, you know, it was like JP Morgan or Goldman or something like that. I would totally interview for them, and I would try to make it happen. But I don't want to live in New York. I'm not going to go out of my way to go and find a job in New York. You know what I mean? I want you to stream longer. That would be amazing of you. Oh, thanks, guys. Stop it. I don't like brown nosers, Jeremix. Don't do that. Oh, you usually miss the stream because it's too short. Yeah, I don't. It's early. I'm sure that if we streamed at like 4 o'clock, they would probably have a larger stream. We actually did stream. You know, there was a time when we would stream like immediately after the market closed, but nah. It's better for me to use that time to work out and unwind. It hasn't been this way so much recently, because I can remember a time where I felt like I was too stressed. And like if I spent the weekend playing Apex Legends, that was like too much stress. And so I stopped doing that sort of stuff. But lately I don't feel that stress. So I don't know what changed, but I could stream myself working out, I guess, but I don't think anybody wants to watch that because I'm not that impressive. We will have more opportunities to talk about politics because I have a YouTube channel, Speculator Seth Politics, and I've been posting YouTube shorts talking about what's going on in the political race. So I need a treadmill walker. I do like to take regular walks in the evening, and I hate it when it gets too cold to do that stuff. Okay, well, it's the top of the hour. It is time for me to get going. So if I don't see you tomorrow, I'll see you next week. I will post updates here on the YouTube posts, and I'll be there in Discord, and otherwise, you know, everything else will be the same, just no stream. So I will see you guys later. In the meantime, stay excellent.